What's up, everybody? Logan here again with another video coming right at you. And today we're going to take a deep dive under the hood of the market with my standard deviated charts like we typically do throughout the week. And, last video did really well. I really appreciate it. I'm going to put that Lolly link below if you guys like to sign up with my link again. Also, make sure you leave a like on this video and a comment and subscribe, of course, if you aren't already. But let's talk about the market. So today we're up 2.57% on the SPX. The market just closed like literally right when I started this video. I wanted to wait for the bell to ding. But looking at my 10-day, this is the chart that I like to trade my 0 DTEs off of. Perfect setup today for a put credit spread, and also another perfect setup today for a call credit spread. I did not trade them today, and the only reason was because we had Europe up 8% throughout our trading day. Anytime that I see European markets or any other markets really move like that, and it's kind of in the direction with us, right? Like I would say that's why we were up today so much. That's the one thing that I keep in mind is like shorting that or even trying to go long there when the markets are moving like that. It's just definitely not my favorite thing to do. So I held off today, didn't trade any 0 DTEs. Just wanted to take a look here though at what we got going on, and I showed you guys my moving averages before, but we are now officially back above them on the short-term 10-day, 30-minute time frame. Then we have our moving average right here, the 195 at 43.15. Well, it's 43.17, and then up here on 43.75. We have our 390, which is the longer-term one. We typically try our best to return to this average in this time frame. So just a quick little flexible grid. 10-day, 30-minute with the TTM squeeze positive, RSI is positive. So this is the weird thing though, is I'm 100% bullish until these two things happened that I want to take a look at. So we'll go two charts. We'll look at the SPX on the daily. I drew this little red arrow signifying that anytime we're down here and the RSI start to try to poke green again, as you guys can see, we generally get some nice movement out of the market right here, just like we had back here. Now, granted, we had a little bit where we stalled out a couple times, but even then, we still got some nice green movement. So the thing that I did not like about today, though, 42.95 is our 10-day moving average, right? Or exponential, the EMA, the 10-day EMA. 42.95.71 as of right now. We rejected that. We were above it with like 20 minutes to go, and then we had a really solid, nice red candle. Drop that 20 points. Kind of irritating to see personally as someone who like wants to get back on the bull in this market, because everybody knows if you're on the upside of the 10 in a 4 DT period or the downside of it, that is typically the direction that the market follows. And you guys can see it through here. We're underneath it, it keeps dropping. We're above it, it'll stay above it for a couple days. Then it just decided to sit on it. Then now that it was below it, it stayed below it and it kept doing that. And it's the same thing back here, right, on the daily chart. Typically, we do not see a break underneath it if you've spent a few days above it and it's a strong bullish market. We're in a whole different market than we were last year. So it's kind of irritating, but yesterday was a perfect short setup, a terrible looking candle. And guess what? The market is full of bull traps and bear traps right now. I mean, this is one of the ugliest candles you can have when it comes to trading stocks. That's showing that price got rejected and then continued to sell off. And here we are, green day, 2.57%, right? So that's something to keep in mind, is this market's full of traps right now. So you have to be very careful. But that was the first thing I wanted to touch on, is we still close below the 10-day, and like, that's kind of frustrating for someone like me. I take my emotions out of the market, but when I'm watching the market, want to trade, capitalize on opportunities, I like to be on the right side of the trade. And when we have something pending, tomorrow we have CPI data, so there's a lot of fear still. And then we have the Euro talks tomorrow morning as well. So those are going to be our two big events of the week. There's really nothing to watch out for on Friday, but tomorrow, which is Thursday, March 10th, that's what I'm going to be eyeing, and that will determine, we could have another 2% day tomorrow, right? Euro could go up again, and we could have a nice little relief rally, maybe go test the 21-day 43.60 area, and then get shut down around there, or continue to rise up. But I could see us having another 2% day tomorrow. Just really depends on what the CPI data says and how the Euro talks go. So I want to show you guys that on the daily chart, and then we'll look at the VIX on the daily chart as well. That's one thing I really want to touch on in this video. If we go look at the VIX, the technicals, we had this candle, which is not ideal, but it did hold support for the VIX, which is a little frustrating. Like I said, we spent a lot of the day underneath this 10-day moving average right at 32. And like the last 20 minutes, we had to pop right back above it, holding this bull trend. But one thing we're seeing here is RSI weakness. We are pointing down now. We're also pointing or starting to lose momentum on the TTM squeeze. And the last time we saw a blue candle show up after a dark blue candle after the light blue ones, granted we did have a squeeze here. We did end up falling for 1, 2, 3, 4, 5, 6 days. And then you guys could see from the 27th all the way to the 2nd, from January to February is the last time we've had this set up on the TTM squeeze for the VIX. That's when we fell, came down, retested this 89-day before taking back off. That has us around 24, 26, which I think by the time we test that, that'll probably be closer to 25. So that's one thing I'm really keeping in mind here is we're seeing the first signs of weakness in the VIX, especially with the TTM squeeze this way. So that's why I'm leaning a little bit more bullish right now. Like I said, cautiously bullish like I was with the video I made with Halcyon, where I'm just more laid back with this market trading in this range. So who knows, maybe tomorrow's another big green day, but we've had a lot of big red days followed by big green and then big red, then big green, and go back and forth. So it's a really difficult time to trade. So I'm just trying to tread water while I can. Couple of good setups to look at though. Did want to show you guys the VIX. I kind of like Google here. Now it's not an amazing setup, but if you look at Google's close, even when the market dropped at the end of the day, it's up 5% today. You can see the RSI is trying to poke green. It's right at 50. This is a really nice look for tech. Coming back, closing above the 21-day by a couple of points. I expect Google to drift up to this 2750 area right here, and then we'll see if it gets shorted from there. But with how the TTM squeeze is looking, there's a lot of upward potential. And then it all depends. You know, we could get rejected here and open up red tomorrow. But I expect us to go at least test that 89-day, which would be really good for the S&P in general as well. Just a very brutal time for tech stocks in general, just a lot of crazy days. But what a big 5% day. Microsoft also did a very similar thing. If we take a look at QQQ, one of the stronger sectors right now after today's move. Overall, not the best looking pattern, but today was a really nice day for tech. And we are testing and did not break above the 10, of course. We got close to testing that 336.50, the zone, but we just didn't get there. And like I said, if we're able to break that, we should get that nice little drift to 342, and then we could drift to 362 on QQQ. So tech's looking a little bit better, especially if we're looking at my flexible grid. This is one of my favorite charts, my 10-day, 30-minute, right? If we're looking at the flexible grid on QQQ, we closed right on top of the 390-day, which is a really good sign that we can see some more bullish momentum, right? We'd like to not get too far away from this. So even to the upside, if we do cross it, you know, maybe we drift to 345, but then I could see us sloping back down. But what we do want to see, which would be really nice, is if this moving average, the 195, can get back over the 390. Tried it back here, got rejected a bunch, and then we sold off. So a couple days of positive price action will do it for us. So that's kind of what I've been looking at lately and where my head is with this market. Just because it's a lot of craziness out there right now. You know, there's a lot of stocks. ARK's still having a tough time. Had a good day today. But what a day for QQQ, 3.6%. And the funny thing is we're still not at where we were on open on Monday. So really crazy momentum on each side. I do like this here, though. I think we have some more potential to the upside, but it really does come down to the CPI data tomorrow. And then also what we're looking at as far as the European meeting that's going on tomorrow. So we'll see what tomorrow brings. I'm really curious, but this is kind of my price action charts that I like to use when it just comes to swing trading a little bit. So that's the daily. We can take a look at a couple other time frames. Actually, I'm also liking IWM as well. Let's pull up IWM real quick. IWM. So this had a nice day. It's squeezing, so this is something you really want to pay attention to. The small caps have been squeezing for about a month. Today's big green day shows that we're trying to poke green. Again, the RSI is there. We closed right on top of the 21 day. So if we can get this squeeze to start firing positively, we should see another like 6% move to the upside. Come test this 89-day moving average, and then we'll see where we go from there. But this is squeezing. The momentum did start out negative because the last 2 days, but once today's data gets in there, we might see this start to turn positive depending on what tomorrow brings. It's up a little bit after hours, but you know, we'll see what tomorrow brings. It really comes down to our CPI data, like I said. So looking at these, just on the daily charts, just super simple, really easy things to look at. And you guys can see we're well away from the mean on these time frames. And then over here on the shorter term ones, we're a little bit higher up, but I do think we could see a little bit more upward momentum just because of how crazy this whole time's been in the market. It's just bull traps, bear traps, everybody getting their face ripped off to the upside or the downside. So it was fun watching the price action day for sure. We have a lot more work to do, but I could see us, like I said, QQQ 346 up here would be nice, or even closing up towards this 340 zone. So getting a little bit more upward pressure on the markets. But this just shows you have to be very nimble when the VIX is this high, because like if you shorted this yesterday, which it was a good short up or set up to short it because we were under all the moving averages, and had a really nasty candle, you woke up and still got demolished on your trade. So got to be really careful during this time. That's going to be everything for me in this video. I hope you guys find some value in it, and I will see you guys in the next one.